Dan, what happened to Pure Storage? Are they seeing the AI love? What's going on?
Yeah. First of all, you did have a great segment there. So congratulations. Yeah, as we sort of head in, I don't think this is just an AI play here with Pure Storage. This one was interesting. It was a kind of a narrow beat on the bottom and a narrow miss on the top. So it was a kind of one of those really close. Company got kind of battered in the wake of its announcement. And let me tell everybody why that happened, because I think a lot of times people go, okay, you barely missed, but they pulled back on their kind of their TCV estimates as it relates to their SaaS growth. So they had about a 600 million annual SaaS estimate. They pulled that number back to 500 million. So I think that was where a lot of the reticence about the name came. They've been making this pivot to subscription, to ARR. And so showing a bit of a conservatism there, I think, was met with a bit of a hesitation. Look, I put out my note, a really brief note. And I said, here's what I really like about the company. One is very focused on power. So right now, as the big what's at stake for this AI build out is going to be power consumption. Pure is, showing meaningful efficiencies gain versus other tier storage. And they're that's a huge thing to be watching for against other modalities. And the other thing I said, and I'll lean into this, and I feel like I have to lean into every quarter, is this is a company that's obsessed with happy customers, and is the highest NPS score in the industry, has remained that way for years on end. And so they're executing by being really customer centric, having very low attrition rates, high growth rates, which serves them well in this sort of pivot that they're making from where they are as a storage company to a full on SaaS ARR company, across their evergreen portfolio. They're adding customers at scale. They're growing double digits, Pat. It's a little slower at 11%, but they did see 24% growth of their subscription business. So although they did pull back a bit on TCV on cloud, they are still growing mid double digits, a solid backlog. The company's in a good position overall. So, while, Pat, I think this company wants to make attachments to AI, and I think they're doing some other things pretty interestingly well, in terms of different types of storage that can be leveraged more efficiently for scale up, scale out, and direct to flash. They also, they play in that sort of cloud native space. People don't talk about what they're doing there, but the Portworx acquisition was material. And then, of course, they play in the SaaS space. So you kind of put all these things together. They address block, file, object, and they're able to basically help customers reduce power. I don't know. I think the number's like 2 to 5. They have a TCO. They've. I'd love to do this in our lab because that's what I like to do. But I mean, they're showing like 50% total cost of ownership reductions versus typical configurations. Now, again, that's why I'd like to do in our lab, because I want to know exactly what that is. But lower cost to operate, higher reliability, Pat. I mean, that's the things that they focus on. And I like that they're so outcome driven. But the bottom line is this: they've told a SaaS story. They slowed their SaaS estimates. Market reacted to it that way. But I still think there's a lot of optimism that should be around this company. It's well positioned, and of course expanding too, even into areas like cyber resiliency.
Yeah, so let me add on to that. So first of all, talking about the TCV target, right? This is all about Evergreen One and subscriptions. They did reduce it by about $100 million from 600 to 500. But there was a lot of discussion that these deals just take longer. They're big. They take longer to close. But they have not shifted to capex purchases. On the hyperscaler piece, I'd love to know which ones they are. Unfortunately, we didn't get to talk to Charlie this quarter, but when we attended their Big Tent event in Vegas a while back, he actually talked through that opportunity and floated that on the calls. It's interesting. I'm going to have to drill down. Hey, is a hyperscaler right at the top 5, or are they tier 2 CSPs? This XAI deal, I believe that they were very much engaged with this split deal between Dell and Super and super micro. The company has the right strategy. I mean, whether it's on-prem, whether it's in a colo, or if you want to have, I like to call them, basically hybrid cloud connectors. You can do that, and you can have one management plane across all of your storage. That's just the right strategy. That's the future. And if anybody doesn't have that, you're not going to be successful in storage. On the competitive front, there were some questions about QLC and NAND pricing. They were one of the first in with QLC. This direct flash is definitely a differentiator, in my opinion, in some of these price sensitive workloads. So hopefully we'll get to talk to Charlie next quarter, but it was hopefully you appreciated that analysis.